go ahead and dive in today. This is might have scared some people away with today's topic, right? We've been going strong, trying to get ourselves organized with different aspects of our business. We've spent some time talking about organizing all the paper that we deal with, the people, our clients, the vendors that we work with. And if you scroll it all the way back to the beginning, remember we started with time and time management. And each week we've sort of reflected back on things that I've encouraged you to do early in this series that will then sort of translate and help you in other areas. Money is definitely going to be one area today where I think people tend to avoid rather than face head on, if anything. So if that's you, you're not alone in that category. And we're going to tackle a little bit of that mindset today. But I think what you'll see is that several times as we talk about getting organized, we're going to go right back to the beginning, talk about time management and how you have to factor time into your schedule to pay attention to money and money matters. The fact of our business, where you're serving as an independent contractor, you're essentially a self-employed individual. This is something that if you feel like there's some chaos in your life around money and finances, let's get a handle on that. And let's talk about some actual, like, legitimate action plan strategies that you can take away from our conversation today that can help you in your business. And if you at any point want to add, offer a suggestion, have a question, we're a pretty chill group. So go ahead and unmute yourself and jump in case I miss you with a raise of a hand or a message in the chat. So let's go ahead and kick it off. If you are joining us, if you can just make sure that you're muted, unless you do have a question or a comment, that would be great. All right, so here's what we're going to tackle today. And again, I always start with this. These are questions that you should be asking yourself right now and start to think about, what are the answers? Do you have a system in place to manage the pluses and minuses of your real estate business? And if you have a system in place, if you had to rate it on a scale of 1 to 10, and actually let's go 0 to 10. If you had to rate it on a scale of 0 to 10, 0 being no system, 10 being fantastic system, where would you rate your system right now? And if you want to drop that in the chat, you can either drop it to me, you can drop it to the group publicly, whatever you want. But I would love to just know where everybody is in that process, where you are with your system. And when I talk about system, it's you knowing how much you're spending in your business, how much you're earning in your business. And if you have to go and sit down with your tax accountant in the next week or two, are you prepared to do that for what took place in your business last year? So that's what our goal is, right? I appreciate that. Okay. Oh, I love the 7. That's fantastic. That's a good number. And it's going up. So that's really good, Teresa and Rochelle. Good. So, but no surprise there. I'm seeing, in some people's numbers, I'm seeing 1s and 2s. And that's not a surprise because, like I said, this tends to be sort of a painful, unpleasant topic and component of the work that we do. So people tend to give less attention to it, not more. The other thing is, I'm wondering, do you leverage professionals in this area? Do you seek out guidance to help you, to keep you on track, to give you professional expertise, to help you better manage your business, to improve your financial position, and potentially minimize your tax obligation? Those are some things to think about. And then, of course, there's that whole big looming, let's even go back 6 months to the conversation that we had in this training forum about setting a business plan. And then once you have a business plan, working through a financial budget for your business. So coming full circle, do you have a system in place for tracking how your business does from day to day, week to week, month to month? And then do you have a system for comparing how your actuals match up against your projections? Okay. Again, these are questions for you. I think I know a lot of the answers, but that's why we're here, right? So accounting and the self-employed, getting money matters together. My good friend Maxine, I'm sure I'm dating myself here, for anybody who doesn't know Maxine, but she's been around a while and she's pretty cynical about these things. Taxes and money are no exception. But the idea here is that we need to bring in some consistency and organization. We're going to leverage technology a little bit. I'm going to give you some suggestions. And again, I'm always open to hear what you are doing that you think is working that might help someone else in this space. Okay. And an important caveat I want to mention, I am not tax accountant. Accounting is my sort of first job out of the gate, if you will. And I've been doing it for many years. I do a lot of the accounting work for other businesses beyond my real estate business. But I am not a tax accountant. And I learned the first year in business with my husband that I'm not a tax accountant. And so we lean very heavily into professionals who understand that space. And I encourage you to consider doing the same thing. Okay. Good morning. So just a reminder to mute. So let's think, what could a strong accounting system offer you? What are our goals in me sort of pushing your comfort level around this to get you going with a system? Well, we need to reduce the chaos, right? Avoidance is not going to help you. By putting off the organization component, by putting off the understanding of what's happening in your business, all you're doing is pushing problems, kicking that can down the curb. The more you can understand now, the more you can, number one, make adjustments in your business that make sense, that are financially smart. And number two, the more you can sort of identify how much energy money is sapping from other areas of your life. Okay. If you can feel like this is in a good place and can work and take action from what you learn, then the energy that you're spending avoiding it is suddenly freed up to do productive things. Okay. This is what we're talking about. So what I first want to do is spend a little bit of time. Let's make sure we understand all the things that we need to know about income, money, expenses, and managing our businesses as real estate agents, as independent contractors, as self-employed sole proprietors, right? We know that there's the traditional commission income, but what about other options for income as well? I'm just going to turn this off real quick. What about other opportunities for income? It goes beyond commission. You could get reimbursements, refunds, or rebates, or you could have other businesses. Not all of us are strictly just selling traditional real estate. Some of us have our own properties and we secure rental income, and then we have expenses related to those properties. Or there might be other related businesses. Maybe you do some things in the home inspection arena, or maybe you're in the mortgage business and you might do some mortgage procurement, or whatever the case may be. A lot of real estate agents have another gig, if you will, that also would be considered self-employed or independent contractor. So the more that you're layering on and the more complex your business gets, the more you want to be able to have a system in place that's going to help you manage all of that. In addition to helping you understand what types of commission income that you're earning, it's going to translate into a couple of things. Number one, obviously, the accounting benefit of knowing your pluses so that you can then identify your minuses. The other thing is that if you go back to the budget, and I'm just going to show this briefly, I'm not going to spend a lot of time on it, but if you go back to some of the budgeting tools that we've shared in the past, and this one is one that I actually really like. Everything that you see here is just an example of what we've done in training, but the one that I really like that was leveraged from a tool that the New Jersey Broker's Office with EXP provides. Remember that this model sort of backs you into how many listing appointments should I get and how many buyers should I be working with over the course of a year to get to a certain production level that will then cover my annual expenses. Okay. So if you have a system in place that allows you to track not only your commissions, but what types of commissions those are, You can match that up against your expectations and make adjustments if you need to. Okay. And then when you go into business planning for next year, that information is going to be readily available because you'll be able to go in and look at the systems that you're leveraging to pull reports to populate that information quickly and painlessly. Okay. Now let's look at the other side of things, the expenses. And there's two big buckets that you really want to make sure you're thinking about as you organize your money and plan to meet with a tax professional. You want to know what your general business expenses are. So these are the expenses that even if you don't close any deals this year, what are the expenses that you will generate to run your business? And then the other thing would be, what are your transaction specific expenses? So if you are, managing listings, running buyers, working with clients, what do those expenses look like? So let's take a look first at general business expenses. Most of these should be obvious, should be on your radar, but a few maybe not so much. Okay, so let's make sure that you have a comprehensive picture of what you should be taking into consideration. All of your licensing and board dues, make sure that you know what they are, who you're paying them to, and when the next bill is due. And don't forget the MLS fees in that too. From an insurance standpoint, you want to think about auto insurance, homeowners insurance, health insurance, and then if there's any other business coverage that might be pertinent or applicable for you personally. Some of us who have a lot of LLCs, especially if you're, if you own a couple of properties and you're renting them out and earning revenue there, you might want to consider, say, an umbrella policy, for example, as an example of what that business coverage might be referring to. You have office expenses for your home office, which is more and more common, obviously, in the world today. In the pre-COVID times, a lot of agents were paying for desk fees to have a physical office space devoted to them to be able to go to. But now, in the wake of COVID, more and more agents are leveraging deductions and tax benefits from implementing itemization of their home office expenses. Okay. There's always your vehicle costs and your mileage. And I can tell you for 2022 in particular, the mileage benefit has improved for the second half of the year. If you'll remember when fuel prices went up, as a result of that, the deduction for mileage went up. I think it went from 58 cents and change to maybe 62 cents and change. Again, I'm not a tax accountant, but I'm just trying to draw attention to the fact that you want to have a system in place to track or estimate your mileage over the course of a year running clients and managing your business. Marketing and advertising. Here, we're talking about general business expenses. So when I say marketing and advertising here, it's about how are you promoting yourself individually? Are you using Facebook and Google advertising? Are you taking out a billboard? Are you running ads in a local business publication or newspaper? Any of those general marketing costs would fall in here. Education and training. If you are seeking out training beyond what EXP and our network offer, and there's a cost associated with that, your CE, for example, is a cost that you should be taking into consideration for your business. Technology subscriptions, and think broadly. Any of the technology that you subscribe to, from Shutterstock to Canva, if you utilize Trello, any of the, and even if you're going to ultimately decide to subscribe to a software package for accounting, those are all things that you are paying for to help manage and run your business effectively. So you want to be able to quantify those. Your signage, your business cards, any other office supplies, any computer equipment, tablet, for example, that would all fall under general business expenses. The costs for people to help you. So leveraging a tax accountant and paying a fee, you should know how to quantify that. And then, of course, probably the most important thing that people often don't understand is brokerage fees. And looking at all the fees from cap to transaction fee to broker review fee, risk management fee, and whatever other fees or royalties your brokerage might charge, and understand how those fees relate to your 1099. Some fees are already deducted before your 1099 dollars are reported. Others are not. And for those that are not, you want to be able to capture those as a business expense. The other thing, transaction specific. So where are we with things that are directly related to the buyers and sellers that we're working with? Again, you're obviously going to have marketing expenses. That could be any of the marketing that you're doing, from hiring a photographer or a drone recorder to come in and get footage for you. If you're doing any type of boosted ads, if you're running any type of online advertising, those things would all be considered transaction specific, but need to be quantified. You have out-of-pocket expenses. Some things you'll get reimbursed for. So you want to be able to account for the income coming to you as well as the expense. But other things are not going to be reimbursed. So think of all of the costs that you incur to stage and manage an open house, as an example, right? A broker's open might be another example. Do you pay fees to other agents? That could be a referral fee, which again should be something that happens pre-1099. So that should already, your 1099 should only reflect the income coming to you. But there are also fees that you might pay to get somebody to help out with a last minute showing. If you're Venmoing an agent, the $50 or $75 to sort of help you out and be available. If you're working with somebody to help manage the open house and you agree to pay them, just a one-time fee as opposed to offering them up clients or leads, whatever the case may be, those are fees that are transaction specific and relate to your business. And then of course there's client appreciation. Sometimes agents overlook the cost of meals, closing gifts, and appreciation events. Now, closing gifts are going to be, I think, limited. Typically, if it's under $4, don't worry about it. I don't think you can even report it. But I think there's a limit of 25. Again, not a tax accountant, but there is an opportunity for you to gather a deduction. But if you don't understand what that expense is, then how can you convey that to your tax accountant effectively? Same thing with meals. Meals historically was not something that you would get a deduction for. But I think as a result of COVID and the impact on the restaurant industry, meals in restaurants did then become a deductible business expense for real estate agents. But those are questions that you should be prepared to ask your tax professional. Okay. And then, of course, the big thing is planning for your taxes. If you understand where you are in your business, what you're earning, what you're spending, and ultimately what your reportable net income is, then you're going to be better prepared and positioned to be able to pay your tax obligation. Okay. So I want to spend some time really talking about systems around this and how we might be able to utilize a system to add some automation and make life a little bit simpler. But before I do that, I would love to hear from anybody just going over what we should be considering. Is anybody willing to share, where are you in this stage of your life with understanding what these expenses are? And where are you with, what are you doing now to be able to track your commission income and how frequently? Would anybody be willing to jump in and share some of that?
Hey, good morning, Diana.
Hi, Lynette. How are you?
Hey, oh boy, learning something new every day. I have found out, and especially when I was with Remax and Jean, that an accountant is the best value, the best money you will spend
Yeah.
behind an attorney and a dentist.
Yes.
Okay. And I have taken old returns because usually I just give all the stuff to the accountant and he does it, gives me the numbers and blah, blah, blah. But now I've been going through it in order to help me prepare for the following year to see what he included and what he didn't include.
It's really important. And as you learn from, going through that exercise once or twice, as you learn, what things help you from a tax standpoint, then you're exactly right, Lynette. You can make corrections and adjustments now that will make that process much easier going forward. So I absolutely agree. Can I ask you, when you say you give everything to the accountant, is that you? Like, we had somebody in our office a couple of weeks ago. They stopped into the office and then they were going to literally meet their accountant, and they walked in with a shoebox, a literal shoebox. So there are still people who do that, who just sort of have a place to throw all of their receipts, all of their paper, until they have that tax accountant meeting. Do you have a system in place, Lynette?
Well, I have a place where I dump, for lack of a better word.
Haha,
But
that's funny.
before I give it to the accountant, I take all the receipts and categorize them. In other
Okay.
words, I'll put all of the gas in one, clip the gas together, the MLS fees, I clip them together. So it isn't as if he's got to go through it and figure it out. And again, I get better each year as I see what he is looking for.
Yep. And so maybe you might be a little bit inspired to try something that we're talking about today, but you let me know when we get to that point. How about you, Sarah?
So my husband got me a credit card, and he makes me charge everything on one credit card, all my business related, all on one credit card. And then the night before we go to the accountant, he exports everything to an Excel sheet and he emails it to the accountant. So before we even sit down with the accountant, he already has everything. So my husband includes my wardrobe on my tax deductible, and the charity, like the money that we give to the mosque. And what else does he include? I don't know. My husband is the number guy. I'm so dumb when it comes to math.
No,
Like
I don't even want to hear you say that.
he's the one that takes care of everything.
And it's certainly good to have a partner in your financial business to be able, to be able to help you and know that, is it that simple as just pulling down, your credit card statement? I appreciate you sharing that. So what I might challenge a little bit with you today is taking a look at how you might be able to build off of that and create a system rooted in a good technology platform that's going to not only, give you the ability to just export a report and send it to the accountant, but also tell you how your business is performing, and also give you that gauge of, where do I need to do better? Where do I need to pull back? Or where do I need to find balance?
Yeah.
Those are all things I would say, think about today as we go through this.
Yeah, I also included I bought 2 coaching courses. They equaled $8,000.
Okay, so their education and training. Yep, absolutely. So for many people, that might stop at CE, but if you're doing anything specialized, certainly that's something that you want to take into consideration as a business expense. And that's good that you're working with a tax professional.
Actually, it's my husband that does everything.
Oh.
He just gives it to the accountant because he's licensed.
Oh. Well, that's good. That's good. It's still having somebody to lean on and having another set of eyes, which I think is what's most important here. How about you, Gene?
I was going to actually touch on the same thing as Sarah already mentioned. I think a lot of mistakes that agents make, especially newer agents getting into the business, is they will use debit cards, for everything, for all their purchases, and everything is commingled, all together. And then they're going to spend hours or days or weeks, and then, the frustration builds in, and then they don't have an itemized list of, what's what. So the best thing that you can do is already similar to what Sarah said, is just have, even if it's a debit card, or, if you have a credit card or something, even with a small limit, whether it's, 500 or $1,000, just use one credit card for all of your real estate expenses. And it's just going to save you a lot of time, especially if you give everything to your accountant. Time is money. So if they have to spend a lot of time going through everything, figuring things out, it's going to cost you more money. But just having, everything on a simple, one card, where all you got to do is give them 12 statements or, a year-end report. Most of these credit card companies will even, categorize and itemize things for you and lump them together based on meals and food, travel, purchases. And So that's a very important thing. So that's all.
Yeah, absolutely. Absolutely. And that was a perfect segue, Jean. You led us right into, sort of where we're heading with looking at systems and maybe sort of graduating a little bit. We talked about time management, talked about getting rid of the paper, and now we're talking about a system to manage our accounting and our money. So exactly to Jean's point, and to what Sarah said before, the need to streamline and come up with a system that's easy to manage. The easier it is to manage, the more likely you will be to commit to that system. And I think there's certainly, having a debit card or a credit card where you can easily pull statements is a great first step in being able to get that information to a tax professional. But what if you went to the next level and actually engaged an accounting system to help you better organize that information? And like I said, give you sort of a gauge how your business, you are a small business owner, of how your business is performing. Along that vein, let's talk about how important it is, to Jean's point, separate business from personal. There will be a few places, right, where things overlap. So, for example, if you're taking a look at your home office and the possibility of being able to, or being eligible to itemize certain expenses, your real estate taxes are a personal expense, but there may be opportunity to apply that to a home office, or your home internet. That's a personal expense, but you may be able to apply a percentage of that as a real estate business write-off. If you have a home office, that might be a better example. So there will be a few places where one particular item, one particular cost to you might have both personal and business characteristics, but that's going to be a relatively finite group. For the most part, you will be able to easily separate both income items and expense items into one bucket or the other, business or personal. And I absolutely agree with what Jean is saying in terms of having a separate business account. And I encourage you to have at least one business checking account, one possible business savings account, and then one business credit card or debit card, depending on your personal financial situation. I totally appreciate that some people feel better about having a debit card and not having credit extended to them. The reason that you want them separate is exactly to make this part of your life, where you're going to leverage an online accounting system, to make it work better for you. Okay. And yes, Rochelle, absolutely. The credit card is a huge component of this, being able to keep it separate. But the important thing is having a separate credit card. When you are using the same credit card to buy your holiday gifts and, go on trips with your family as you are to manage all of your business expenses, what it's doing is you're still going to be able to track that information, but it complicates that tracking, right? The more that you can segregate business from personal, the easier, I think, this part of the process, and being able to quantify where you are in your business, prepare your tax accountant for tax return filing, and be prepared in the event of, do I dare say it, an audit, right? Or an IRS review. The better prepared you are in these moments, the less stressed and worried you will be in those moments when you have to be able to explain where the numbers came from. Okay. If you don't have a separate account right now for all of your income deposit, for your commission depository, that's one of the things that I would suggest as an immediate step to take, is going and establishing an account that only receives your commission income and any of your other business deposits. So if you're receiving reimbursements, for example, for CO, or you went out and bought fire extinguishers for a property, or if you're receiving Venmo from another agent because you helped cover a showing or provided your service at an open house, those types of business related income should all go into that one separate account. And then by that same token, you're going to use that one individual account to be able to manage all the costs that you have to cover for your business. Okay. So let's take a look at some ideas of what we can leverage from a systems standpoint to get us there. So if you are that person that you're just pulling all of those receipts, whether you're printing them or passing them along to the accountant through email, downloading them from online, we want to get to the next step again, because there's a lot more information that can be accessible to you and meaningful to you if you have an automation in place to help. We mentioned spreadsheets. So from a planning standpoint, I think that an Excel spreadsheet or a Google sheet like this one is going to be a really great tool. If you're not using something like this and would like access to it, I'm happy to share it with you. Just drop your email on the link and I'll make sure that you get this template that you can then download either in Microsoft Excel or, like I said, in Google Sheets. But when we talk about actual tracking of our expenses and how we're spending money in our business, I think we want to maybe graduate from the Excels and the Google Sheets of the world. Now we're talking about sort of next level, leveraging another piece of technology, another technology platform, help us do some of the heavy lifting. I think, in the last few weeks, several times we've talked about really trying to lean into systems that we already have in place. So if you're a Gmail user, we've really tried to find Google's solutions for a lot of these organization challenges and goals that we have. But now I think there's not really a clear solution within Google's framework. And so I have 3 recommendations. I'm going to just maybe demonstrate a little bit with one of them today. I've done some research myself to come up with these 3 options, and I've got a ton of experience with the last one. So we have Wave, FreshBooks, and QuickBooks Online. Wave is free, and it's generally very user-friendly and covers probably 99% of what agents would need in managing their real estate business. And I'm going to show you, we're actually going to go through a little test account with Wave. Wave is free, which is another important feature. You can leverage your Google login or you can create a login, but it is free. And like I said, as long as you have what you're talking about is your standard traditional real estate sales business, Wave is going to cover pretty much all of what you need. It's going to give you the ability to track your income, track your expenses. It's going to give you the ability to do some reporting. And it's going to give you the ability to look at not just cash out the door, but also the ability to look at your bills so that if you have a bill to the credit card company for $1,000 and you're only paying $250 of the $1,000 at any given moment, having a platform like Wave is going to help you understand where you are with that bill in terms of what you've paid and what you still owe. That's important too. FreshBooks and then QuickBooks Online are 2 options that get a lot of good press in and around technology, organizations that rate and review tech platforms. FreshBooks is relatively new, looking to compete with the longstanding QuickBooks and QuickBooks Online. Both of these, if you do have other businesses in addition to just your real estate business, so maybe if you're doing some things with managing your own real estate, for example, and you're collecting rents and you have property overhead costs and projects that you're involved in, like renovations and repairs, I definitely would say that you probably want to consider a bump from FreshBooks, from Wave to FreshBooks or QuickBooks Online. I personally had, before cloud-based platforms really became sort of posh, I was a QuickBooks and Quicken user. So I'm really dating myself. So I have probably about 20 years of Quicken and QuickBooks experience. So for me, the transition was natural to QuickBooks Online. But some people like the idea of FreshBooks because it does most of what QuickBooks Online does, but for a slightly better monthly fee. Um, everybody's going to try to attract you by giving you a discount to start. But just understand that typically FreshBooks, you're looking at starting at maybe $17 to $20 a month. QuickBooks, you're looking at a starting plan of about $30 a month. Most people are going to find what they need in either the light or the simple start plan. Although with FreshBooks, if you wanted, what's really cool about these platforms is that you can give access to your tax accountant so that they can log in directly to these platforms to see the activity on your account, to see what's been going on with your business. So you don't have to worry about missing a receipt in the shoebox or forgetting to print something out that could be pertinent. Or maybe you didn't even realize that there was an expense that you should be factoring in or giving to the accountant to examine and review and identify it as a potential tax benefit. So being able to leverage like a FreshBooks or a QuickBooks and give your tax accountant, your tax professional actual full access can be very beneficial. FreshBooks, I don't think you're going to get that with the $17 a month. I think you're looking at upgrading to either the Plus or the Premium, but that's something that you'll want to consider. The other thing that's great about these platforms is that you can integrate pretty easily with your bank and perform reconciliation by tapping directly into your bank records. So they're not sitting there, printing out the statement and, the old days of the physical register book. Now everything we're talking about moving towards digital, right? And making life easier. And then, like I said, not having to worry about, did I bring everything with me to my appointment with my accountant? As long as you have access to your online account, you're going to have access to 99% of the information that the accountant needs to get your taxes prepared. Okay, so let's take a look at Wave. I just want to show you a little bit of what this might look like. And understand that I created, this is not an actual live account, but I was able to go in and create a Wave account just in anticipation of this training. The learning curve was very short. It was very easy. And that may have something to do with the fact that I have an accounting, background, that I'm used to QuickBooks. I'm not lost on that. But, and we can go through, if you have an interest and want to get started on this, I'm happy to help anybody get started and set it up and then educate you on, okay, what am I supposed to be doing to keep up on this on a day-to-day basis? Okay, so let's take a look at what I did here. I've just created some dummy transactions. I entered a starting balance, right? Let's say that we took $2,500 on January 1st and we started our own real estate business. Okay, so I opened the account with $2,500. So we're starting from the bottom and working up. I might have had an expense. Maybe I paid a picture company to take some pictures. So you'll notice when the bank account is growing, the dollar amount for that transaction is green. And when we're paying an expense, the dollar amount for that transaction is black. Okay. So then we're looking at, having a few commissions. Wow, I really did a great job in my first 30 days in real estate, right? Closing 3 deals. But I posted some commissions. So these are all green transactions. And then I also have a transaction making a bill payment to Visa. So how do you enter information into a system like this so that you can get reporting information out of it? It's really very simple. If you have a new transaction, if you have a new, let's say I receive a Venmo payment, you can simply come here to add income, and then you can set your date. So these are just a few fields of information that you have to provide. It's like in the old days, sitting and entering the information in your checkbook register. Okay, so let's say, the last day in January, I received Venmo to I covered a buyer for Sarah. Okay, and I received that as a deposit. It's going to credit my checking account. That's what this cash on hand was just the default checking account name. Okay. And then what I can do is I can click on the category to be able to identify what type of income this is. If I wanted to get specific and break down commission income into further components, I could do that. So once you sort of, like I said, build that learning curve and get an understanding of how the platform works, if you wanted to separate out your listing commission income, your buyer commission income, your rental commission income, you could do that. And again, the more time that you spend sort of in your sort of setup and organization on the front end, think about how when you run a report at the end of the year or, beginning of the fourth quarter, when you're in business plan mode, business budgeting mode, how knowing how your commissions break out could benefit you. Okay. So let's say in this case, I just go ahead and apply it to commission income. One of the things I really like about Wave also is that I can add notes here if I need to remind myself about the transaction. And I can also drag a receipt. So if I have an image of a receipt, if I took a picture of it on my phone, if I have a PDF of it, and with many places now, you can opt at the time of checkout to have an email copy of your receipt as opposed to a physical copy. That's great for this because now you can simply drag and drop the receipt right here and it stays attached to this transaction. So if you're sitting there with the accountant, can't remember what something is, or they want more detail, then if you're just keeping up with this along the way, everything's right there in one spot. Okay, so really, really easy. The other thing that you can do, it's called splitting a transaction. So maybe I received a good example of this might be, let's say I was a dual agent on a transaction and I received list commission and buyer commission. You can split the transaction and reflect the two components that add up to the total that was deposited into your bank account by using this split transaction option. Okay, so then let's see, the last thing I have to enter is what did Sarah pay me? Let's say she paid me $25 to cover the buyer and I hit save. So now you'll see what happens is that I've gone ahead and added this transaction for $25. And now it's going to be reflected in my cash balance as well. So this is like giving you the ability to not only manage your check register, but track a profit and loss, all by just entering it one time in one place. So how does that look like from a reporting standpoint? Let's say I added all of these items. Even before I do that, I don't want to jump to reports. Let me show you what you can do with an expense. Okay. The way I would recommend when you set up your expenses, sometimes you're going to pay the expense directly to the vendor. So for example, if you look at this January 4th entry, I paid Picture Perfect directly $350. But a lot of us are putting expenses on credit cards, right? For a number of reasons. One, because maybe we don't want to use a debit card online. Two, we want to be able to track, and we think having the credit card is going to help us with that. Three, you might be getting some sort of incentive or points value for travel or other purchases by putting your charges on the credit card. There are a number of reasons, right? But we want to make sure that we understand what those expenses going on the credit card are, even if we aren't always paying them in full. Well, you can do that with a platform like Wave or QuickBooks. You can simply go to purchases and go to bills. I'm going to show you an example of two different bills that I entered. The first one was I just entered in a mock Visa bill. So let's say I received the bill. I identified it as coming from Visa. I gave a bill date and a due date. This is great because from an organization standpoint, if you're entering it and you know you have time before it's due to be paid and you're trying to manage your cash flows, having this information and being able to pull a report on it will again help you identify which bills have to take priority as to when they're due. Okay. And so I took that mock credit card statement, and I actually entered all of the items that were on the statement, not necessarily items that I'm paying in the moment, but items that were on the statement. Okay. Wave is great because you have the ability to add a description. So if I want to remind myself, because I might enter this $75 meal, but not remember who it was with or what it was for. So in the moment when I'm entering the bill, I can put that description information. Okay. And then I have the full bill. Let's say it was $1,000 bill. And at the end, I just hit save. Okay. Now, what you can do from the saved bill is, let's say that you're ready to make a payment. Okay. You can simply come over here to the right-hand side and Wave, and QuickBooks and FreshBooks will have similar options, and just click on make a payment. When you do that, it'll come up with your payment box. You just identify your payment method. So in this case, if you're paying cash, the amount that you paid, and then the account that you debited. Okay. So if you made a payment online, you might come up here and say that you paid cash. If you paid with a check, maybe if you're still physically writing checks or did online banking and have a check number, then you can go ahead and enter check. And then you can enter the information about the check here. Okay. You'll select your payment account and then any other notes that you might have about that particular payment. So then what happens if we go back to our transaction list? What happens if I enter a payment to pay this full $1,000 bill? So let's say I did that on January 27th. This is what it would look like. When I only entered the bill before I paid it, it would not appear here in my transaction register because I didn't spend the money yet. I didn't send the money out the door. Okay. Once I send the money out the door, even if it's partial payment, that's when it'll come here. And that's when it would be reflected here in my account balances. Okay. This is an important distinction because I'm going to show you in a minute how, from a reporting standpoint, that $1,000 versus what I may or may not have paid as the full balance really is going to be important information for your accountant to know. The other thing I'll just show you real quick, because this will help translate with bills. So I showed you the first bill. This was for $1,000 to Visa that we've paid in full. So now it shows the amount due as $0. Then I went ahead and added another bill. Let's say that this is another Visa bill that we got in February for advertising. Maybe I took out a billboard and I was billed $2,500 on Visa. Okay, so again, through Wave, I'm able to quickly add this bill to my online account. But if I go back to that transaction list again, you'll notice that that bill for $2,500 or any component, any portion of it is not reflected here because I haven't paid anything on it yet. But that's important to my business. That's an expense that I need to consider in operating my business this year. Okay. So now that sort of plays into the reports idea. If I go here to reports, now I'm going to have the ability to actually generate some consolidated reporting that tells me how my business is functioning. So let's take a look at profit and loss. And remember to keep in the back of your mind that these tools, if you're using one of the platforms that your tax accountant can log into and gain access to, they're going to be able to come in and see all of this themselves. Okay. So let's say I'm running a profit and loss. What are my income and expenses for my business for a certain time period? Again, very easy to maneuver in this platform. You can quickly run the report. The one thing that you want to understand is that you have options when you run your profit and loss to either look at it from an accrual standpoint or from a cash standpoint. Okay. If you're looking at your business from a cash standpoint, then you're only going to see cash that came in and cash that went out the door. If we think back to that billboard invoice, my billboard invoice did not involve cash coming in or cash out the door. So that invoice would not be reflected if I ran this report on a cash basis. Accrual basis is what will allow me to see the bills that where I've incurred maybe credit card or credit charges that have yet to be paid, so that I can factor them in and explain to my accountant what should and should not be considered for tax reporting purposes. Okay. This isn't a report that as soon as I came to the page, the summary is here, but I can click on details and get right to the detail here. Commission income. And remember, like I said, you can take it one step further and really explode out your commission categories so that you know what's listing income, what's rental income, and so forth. Then you can take a look at each of your expense categories. Again, you have the ability to be even more specific than the recommended expense categories that Wave gives you. I was prompted when I set up the account. I remember it asked what type of business I had, and it said a real estate business as an option. So I obviously picked that one. So most of what you need will be here, but you do always have the ability to customize and drill things down further. Okay. The other thing is that if your tax accountant has a question on a particular line item, so for example, advertising and promotion, they can click on it and immediately get to the detail of everything that makes up that $2,900 number. Now they might say, gee, that's a lot more than what you spent last year. I want to look even further at what this $2,500 Visa bill is. So again, you or the tax accountant can click into it and get right to the detail. Okay, so all right there, all with just a few clicks, having the information at the ready. The challenge with a system like this is being able to stay with it, right? Set it up and then devote a little bit of time, either every day or every week, to entering your new transactions, being able to spend time with it monthly to reconcile it, to project where you expect, say, your next 30 days of cash flow to be, what bills are coming up due, and then taking the time quarterly or semi-annually or minimally once a year to tie this information back to what you wanted to see happen for the year when you did your business plan. Okay? Does anybody have any questions or thoughts or comments? Does anybody use Wave or something similar right now in your business?
Hey, Deanna.
Hi.
Hey, not about Wave or this. This is, by the way, this is awesome. This is really like super techie, geeky, which is great. But for many people like me, I'm never going to do this. This is the reason why I will also just hand the shoebox to my accountant. But
Pretty sure you don't have a shoebox, Gene.
no, I know, but you know what I'm saying.
Yeah.
Off subject though, real quick, just an an app that I've been using for many years. I don't know, maybe 7-8 years. It's called Mile IQ. It's not
Mile
free.
IQ.
Mile IQ. It's not free. I think it's either 10 or 20 bucks a year. But it just kind of just sits there in the background, and it's kind of freaky. It just tracks your driving as to where you're going from point A to point B. And then every once in a while you can open it up and you can almost like swipe left or swipe right if it's for personal or for business. And it'll keep track on a monthly basis of exactly how many miles you're driving for business. So you don't have to sit there like with a log and a piece of paper, and which I'm pretty sure nobody does, maybe a few, but that's just an easy way to track all your mileage. Yeah.
That's great. And that's something too that, if it's as easy as an app on your phone, then you could be literally sitting at a traffic light and looking at, that week or that day and swiping left or swiping right with something that simple to be able to say what's been business and what's not. So again, in terms of what your commitment level is, really low, but in terms of the benefit, really high. So $10 or $20 a year, I think that seems like nothing to be able to get that information at your fingertips. And again, not just get the information to the accountant to get the benefit now, but if you have to be able to justify that information later, your ability to demonstrate that you have a system in place really speaks volumes to your credibility in that situation. And, without giving anybody gory details, when you've been through an audit, you understand the value and how you are valued when you have good systems in place and can back up your numbers.
Mm-hmm.
I second Mile IQ for sure. It's super simple and it reminds you when you haven't logged your driving in a while.
So does it automatically recognize when you're in the car, or you have to turn it on?
No, that's the beauty about it. You don't turn anything on or off. It just knows. Kind of like, our government, they know everything.
Your location setting has to be on, but
Okay.
I mean, most people have the location setting on all the time now. So
That's true.
Mail
If you do turn off your location services, you'll get a notification. Something will pop up regarding MileIQ, like it's not tracking.
Okay, great. Oh, well, that's really good to know. Jack, I saw that you had a question in the chat about handling old transactions. I think the value of doing something like this now, just coming on the end of the first quarter for 23, depending on how much how much activity you've seen in your business over the first 90 days, I do say it would be a worthwhile exercise to consider going back to the beginning to January 1, because it does make sense to be able to transition to a new system at the start of a new tax year. It's going to make your life easier and your accountants easier come 12 months from now. Having said that, I would not go back necessarily and recommend, say, redoing 2022 before you meet with your tax accountant, unless you feel like that would be a way that you could learn this platform and sort of figure out how it works as your test case. That's totally up to you. But I think, being able to do it now, early enough in the year, when maybe a lot of agents too have been a little bit slower and experiencing winter market on top of that, it would be something I'd consider retroing back to January 1. And did anybody else have their hand raised there? Are we good?
Diana, I have a question,
Yes.
but it's
Yeah.
like off topic almost. Do real estate agents need to have an LLC? Because I see like some of my coworkers have an LLC. I just don't understand if I need one, I don't need one.
Sure. So you're not required to have an LLC. In New Jersey, all commission has to be paid to an individual, not a business entity. So you can't have your commission directed to anything other than Sarah and an account with Sarah's name on it. But there are reasons why agents, for example, have an LLC, but that's because I have team related expenses and other things beyond traditional real estate that I leverage the tax benefit, the insurance benefit, right? And sort of the insulation benefit of having an LLC to manage those expenses and those vendor relationships that I wouldn't get by managing that as like a personal line item for me, for Deanna. So my recommendation for you in that regard would be have a conversation with your accountant, talk with them and ask them questions. They should be asking you, what are the things that you're doing in your business? Describe to me your business activities. What does it look like in sort of a typical year in the life of Sarah, the real estate agent? And they should be able to help tell you whether it makes sense or not to set up an LLC. A lot of agents that are just really sort of sticking to that traditional real estate space may not see a need or value in it. But if you start to get into like property management, where you're buying properties, renovating properties, renting properties, there's definitely a very strong business case for that.
It's Dan, I can add
Yeah.
2 things also.
Yep.
So number one, this is not financial advice, speaks to your tax professional.
Yep.
But do speak to your accountant, because some accountants will tell you it does make sense to. So first thing, the paying to an LLC, I believe, has been approved by New Jersey, but the problem is that we're waiting on the approval of the Real Estate Commission. That's where the holdup is right now. So the state, I believe, did approve for us to be paid to an LLC, but because, like Deanna just said, you can only be paid the Real Estate Commission. I mean, the broker can only pay a licensed entity, and your LLC is not licensed. So I think we've been waiting on the Real Estate Commission to approve that portion for agents to open LLCs and be paid to an LLC, because there are tax advantages. But I believe it only makes sense when you get to a point of where you're making maybe 80 to 100,000 a year, because then you can, not even an LLC, but you want to talk to your accountant or your financial professional about even having an S corporation, because then there are benefits. It does cost more money to file as an S corporation, probably about
What is that,
$1,500.
Gene? What is that?
It's how you file. There's LLC, there's partnerships, there's C Corp, there's S Corp. But again, speak to your accountant. But most agents that I know, even when I was the broker with a ton of agents, a lot of them opened up S corps. And the reason why you want to do that is because with an LLC, you can't put yourself on payroll and pay yourself payroll through an LLC. But with an S corp, you can put yourself on payroll, let's say for minimal, let's say that's why if you're making 80 to 100,000 a year, you can put yourself on a payroll, let's say for 40,000 a year. You will pay some employment payroll taxes, but you'll be saving, from my understanding, it's anywhere from maybe 10 to 15% you'll save on taxes, even though you're paying on the 40K as far as collecting from an employment standpoint. There are greater benefits and tax savings by having the S corporation. Again, this is not financial advice. Talk to your accountant.
We're in
Thank you,
those
Jean.
waters, Jean. Yeah.
I just
And-
Googled all this. I don't know anything.
Yeah, right.
And
You are
to
Mr.
Jean's-
Google.
Yeah. To Jean's point, there was the legislation, I want to say it was passed maybe a year or 18 months ago in New Jersey, because there are other states in the country where commission can be paid to a business entity and not to an individual. The challenge in New Jersey is, even though the legislation has now been passed in New Jersey to allow that to happen, the Real Estate Commission is apparently still insisting that that entity has to be licensed by the commission, which is kind of like, what's the point? My brokerage is licensed and they receive the commission. So it's kind of sort of hung up in red tape, if you will. So I think it's still a little bit away from seeing that happen in New Jersey, but we do try to keep tabs with the broker's office, at least from EXP standpoint, to see if there's any movement there. But lately it's been kind of crickets in that regard. But you never know. Around this time of year too, with tax filings, some of these topics tend to get a little bit more attention than other times during the year. Anything else? Any other questions, comments, feedback, on topic, off topic, anything related to money or accounting? Okay, so what we're talking about here is exactly like I said, just putting in the elbow grease to spend the time working this system. If you decide that, yes, I need to graduate from what I'm doing now, that printing out my, credit card statements alone, or throwing the receipts in a box and organizing them at the end of the year, that may or may not be working for me. I would challenge you that if we're trying to get away from paper and get towards a more organized lifestyle, that you really want to think about one of these platforms to help you do it. It needs a little bit of your time to stay on top of it daily or weekly. And I understand Jean's argument too, that most people will not commit to this, but that's what we've been talking about for the last 4 weeks, right? Is that if you can spend a little bit of time committing to some of these changes, they can have really big impacts on not just the organization of your business, but your overall mindset, your overall sort of stress level. And help you manage the chaos that you might be feeling. Control what you can control, because we know that there's plenty in this business that you can't. Okay. The other thing that I just want to mention as we talk about putting in the elbow grease, it's not important just to meet with your tax professional. That's huge, right? Have a tax professional or find a tax professional and then meet with them once a year. But the other thing too is that you want to make sure that you are meeting with an insurance professional as well, because depending on exactly what your business looks like, what your business activities entail, you want to make sure that you have appropriate insurance in place to protect you. And that's everything from your healthcare to your homeowners and auto. So like I said, if you need an umbrella or business owner's policy, your insurance agent, a licensed insurance agent, not me. I'm just directing you to talk to somebody who's licensed and qualified to help you assess whether you have the appropriate amount of coverage and protection in place. It's really important. You don't want to learn that you aren't properly insured because you need to lean into a policy. Okay. That's not the moment when you want to find out that you're vulnerable. Okay. So set up your appointment with an annual accountant. It's worth the exercise when you are a small business owner, when you are an independent contractor. It's, you know, that's sort of when you made that decision to be your own boss. Part of that is putting yourself in a position to not just, you know, file your taxes online and hope and pray for the best, but leverage a professional who can help maximize your tax position. Okay. Leverage an insurance agent to help maximize your protection and insulation with insurance coverage.
And Deanna, one more thing.
Yeah.
And
Mhm.
if you do own a home, if you're a homeowner, I would strongly recommend talking to your insurance broker, you know, or you know, financial professional about an umbrella policy. For a long time, I did not have an umbrella policy. Most people don't even understand what it is, but it just gives you a lot more coverage. God forbid, you know, something happens, especially if somebody is, you know, walking in front of your home, they slip on your sidewalk, that's your responsibility. And, you know, you think, oh, I have homeowners insurance, but you really want to look into that to make sure that you really have enough coverage. And if you have multiple, you know, businesses and you're, you know, making money, that umbrella policy, which by the way, I mean, I think I got a $1 million umbrella policy. And I swear, I think it cost me like $300 or $400 a year.
Yeah.
So that's
Yeah.
just another piece of advice. You want to look into that.
It's, you know, relatively speaking, very affordable coverage typically compared to what you might be looking at for, say, your homeowners or your auto policy.
Correct.
So absolutely something. And again, that's where you having the conversation with a licensed professional and explaining what you do, what your business entails, and also be vulnerable to say, this is where I'm concerned. This is where I need your attention. Should I be doing something here? That's where you take those questions and get those answers so that you don't, in a time of need, find yourself sort of up against the ropes. Okay. So the idea here is that we're just today, I hope that you spent the time today just thinking about how to get rid of your shoebox, that if you're not doing things right now to leverage technology in this part of your business, let's, you know, step up now and start to make a change, right? Small changes that maybe we just try to get online and start entering some information now in the moment. Or maybe we try to get away from at least putting everything in a shoebox and getting everything to a point where it's digital, right? We'll take some baby steps. Ultimately, at the end of the day, we want to get to the place where you're full circle, where you understand not only does this help you from a tax standpoint, from an insurance standpoint, and from an overall sort of stress management standpoint, but it's all going to tie back to how you as a small business owner are planning for your future and managing your business going forward. All of these things relate together. So I hope that you took something away from today and are motivated to maybe take some small steps here. If you have any questions or if you want any of those resources that we talked about, I hope that you'll take me up on them. You can email me at deanna@goconnectionnj.com and let's get going. Now in the next 4 weeks, so we've covered time, people, paper, and money. Now, for the next 4 weeks, we're going to continue to talk about technology in different ways around marketing. This is where we're really going to get into some nitty-gritty stuff, everything from open house marketing and your listing presentations, your buyer presentations, leveraging other technology platforms that you might not have even thought about being beneficial to your business, small things that you can do with big return, eliminating the chaos and getting you organized around marketing. Okay, so come back here 10 o'clock next Wednesday. And then don't forget Wellness Edge on Fridays at 9 a.m. We start our Fridays a little bit earlier so we can maybe end a little bit earlier and celebrate the weekend. So everybody have a great day. Have a great rest of the week. And I look forward to seeing you on Friday.
Thank you.
Thank you. Have a good one.
Bye-bye. You too. Bye-bye.
Bye.